recently listed. Now, I think we're early, right?
We're early
in this event, and we're early in launching multi-token futures. But what you're going to hear on this stage and the others
频道的会员其实可以享受我们的独家内容的。先跟大家解释一下啊，我们的萌新级别就是为刚刚进场的朋友准备的。周一到周五每天一个小币种，告诉你什么价位买，什么价位卖，持有多长时间，在哪里可以买得到，手把手教你怎么去完成交易。白银级别呢多了一个周四的会员专属直播，每周四晚上8点，咱们聊聊你关心的问题，聊聊这个圈子当中发生了什么，聊聊地铁化，聊聊怎么一起慢慢变有钱这个事儿。黄金级别就更厉害了，大家知道在币圈最难的、最吃力不讨好的是什么？就预测价格，对不对？在每周一上午8点周盘结束之后，我们会发布会员专属的周评来预测下一周的走势究竟会如何。另外就是还有我们的操盘日志，也是黄金级别专属的。大家知道技术指标非常多的门派，但是最简单的东西反而就是我们用技术指标教会你怎么去积累盘感，怎么去找交易的感觉，同时在过程当中丰富你的交易经验。当然，会员您付费，我们给的是会员专属的内容。
So regardless whether you have volatility or not, if you have huge changes in the market, we stay up, nothing goes down. Clients can come in, they can manage their risk. They can trade with capital, so they're capital efficient. The prices are transparency, and there's an easy way to get price discovery. There's no other exchange like it.
So the regulatory infrastructure that we have in the U.S. market
It's this idea. We talked a little bit about compliant innovation. What we're looking at for a contract that we're launching in April is a CDOR contract, which is a CoinDesk overnight rate. They've created a number of contracts of looking at stable coins and trying to figure out how do you manage your interest rate risk. All mature markets have a way to manage your rate risk. You don't have that in the crypto space at the moment. ICE is going to launch the CDOR contract on the USDC. And so what that is the CDOR looks at the average borrowing and lending network. It takes that interest rate, which is compounded second by second. CoinDesk overnight rate is taken by CoinDesk. They figure out the index for it. We create a monthly contract. So suddenly you have a SOFR for USDC, which has never been done before. And this is one of first of many.
I know. It's a tremendous amount of innovation between our firms. It's an institutional partner. We have a deep history together. We're thrilled to launch these futures. Look for the BNB future. Look for the CoinDesk 5 future. Look for the CoinDesk 20 future. Our time is up here, but if you walk right down that aisle and look on the right, come visit us at the CoinDesk Indices booth, and we'd be happy to chat more. Thank you so much. Enjoy the conference.
Thank you.
Hey everyone, if you're just tuning in, this is CoinDesk Live coming to you from Consensus Hong Kong. The buzz here on the showroom floor is being amplified on social media. Let's take a look at what our attendees are sharing. All right, this tweet here we have looking at the Pudgy Penguins hike. We were just talking, Bonnie, about the communities that are built around IP, the community showing up here at Consensus Hong Kong. Community getting together to see the city of Hong Kong, checking out Hong Kong skyline and harbor. Super awesome. All right, now we're going over to one of the stages. Seoul drawing a full house for this morning's session. I'm going to be on stage tomorrow talking about Seoul. Bonnie,
I'll be watching you.
Yeah, you're going to be watching me. All right. At our last tweet, we have Anna behind the stage, so backstage on a panel today talking about AI verifiability. AI is a big theme here.
Is it different
because Hong Kong loves this tech and AI? Does it feel different here, or?
I think the conversation has kind of evolved. You know, when we're talking about crypto, AI has really entered the chat. It provides a real use case for crypto. Bonnie, I know you weren't here at the desk earlier, but Charles Hoskinson was saying something I hear a lot of people in the industry say. It's, you know, AI agents are going to be the ones interacting with crypto in the future. We're going to be maybe using products that are built on top of the technology, but a lot of the financialization that we talk about, maybe AI agents are going to be interacting with it. So I think the two worlds are just coming closer and closer together.
And maybe we'll retire early.
Maybe we'll retire early. That is the dream. All right, let's keep this show going. We're going to get to our next guest now. Ella Zhang joins us from YZ Labs. Hello.
Hi, everyone.
Thank you so much for joining us here. We were just talking about being on stage. You have a fireside tomorrow. Talk to us about what you hope to tell the community tomorrow. What kind of insights are you going to reveal in that fireside?
First of all, thanks for having me here. So what I'm excited about is really to meet so many builders here. Consensus really, the conference bring all the builders, investors together. And we learned a lot of new ideas, new innovations are coming on the way, just to learn from each other.
What are some of the most exciting things you've seen recently that people are building?
Yeah, so RWA definitely see a lot of TradFi people come here in Consensus, want to tokenize the valuable assets, and everybody talk about the mechanism, the brokerage, what's the distribution channel, and payments is definitely a big next wave because Genius Act obviously push stablecoin to mainstream, and we see different countries they are issuing their currency-backed stablecoin, and the foreign exchanges technologies are bring up in different conversations. So those are the new infrastructure we see gonna be the next focus of the building. And also application-wise, a lot of people still very hot topic into prediction markets, how to make the prediction markets more viable through those low use cases markets instead of like sports or the political voting, everything. And another thing we see is Oracle obviously become the most important infra right now, still kind of lacking, supporting the new wave of the financial system. Those are things very exciting.
Well, if I were to sum up everything you said, it really sounds like infrastructure, yes. Right? If you were to think about your thesis heading deeper into 2026, is it really focused around infrastructure? Are you looking for builders and startups that are focused on building the pipes that are going to help TradFi meet DeFi?
I'll say that's both, right? Infrastructure is something necessary and we have to make it strong. Compared to TradFi, crypto today is still tiny, probably 1 to 2% of the entire market. Why is that? Because the trust is still lacking there. The credibility of the traditional financial system experienced over 100 years evolving to today. And there's still a lot of security, custody, regulation, compliance need to become a complete piece in order to serve the future financial market. So infrastructure is always something very important. Wallets, how to make it secure. There's still several hacks happened last year. How do we make it TradFi people really trust crypto? Versus the application-wise is really where to bring in the real users at the mass adoption. So we actually kind of very interested in backing the founders from both sides.
They're backing a lot of founders. And I assume as you walk, at this event, people come up to you and try to pitch you their stuff. What are some common mistakes you see people make when they try to approach you? What's like a big no-no?
Yeah. I think one thing that's very common is everyone think about token. So at Easy Labs, we actually advise founders, don't issue token. when you haven't find the product market fit yet. Issuing token before finding the real product market fit really is a liability and distraction for the whole team. So focus on building, find the product market fit. At some point, when the token economics will be another driver for your community, that's the time. So this is one thing. And also another thing, still a lot of people, founders still aim for the high valuation, which we see it's not something very suitable in crypto, because given the culture, the spirit of fair launch, and have more people community participation. So having strike for the high valuation as early point is really a common mistake we see today. That's two things, yeah.
You know, there was a time when I saw founders raising money and then blowing that money really quickly on things that didn't really help them bring their product to market. When you see founders who are raising money, how do you advise them to best spend that capital so that they have enough runway to experiment and to bring the right product to market?
Yeah, I think I'm founder myself too. I think a common mistake founder made is not to fire fast enough and have a very big team which bring up your the burn of the company. So really think about what are the necessary function and team members are necessary for the early products to go to market, and not building a luxury office and a big team at the early stage. So make your the capital efficiency. Then really don't need to raise so much money and dilute yourself and dilute the community as well too early to the limited amount of the capitalist, right? So how to use a limited amount of capital and resources to reach more adoption is what we help to advise founders and to think of. That actually will become more powerful. For example, Binance didn't raise any money until it became the biggest exchange. And so far, it still have very limited shareholders like UAE. They come to back really after the business become another mature stage. So we believe in the crypto, the community-driven. The users and community will tell you what are the real demand. Leverage that to go to market. Don't spend too much money on that.
When you look at the venture landscape from the East and the West, do you see a difference there? How people approach different things, you know, from different angles? How would you, you know, explain that to people?
Yeah, very interesting question. I think US is definitely the center of the capital, talents. So we actually see founders are more focused on domestic markets more. That's a natural advantage, unfair advantage they have, versus the Eastern founders. They are forced to be international from day one. They are navigating the different countries' policies from day one to talk to understand different frontier markets. That's what we see. The mindset, the focus. Also, Eastern markets, the user behavior subscription habit was not so mature. So how to cultivate subscription like the Western markets, like US market, is the founders are all thinking of. And obviously they want to target the US market. So there's still kind of a lot of competition happening. And US capital, because of the political, the geopolitical issues going on, I think US markets are more concentrated in the US founders versus the global capital are kind of supporting the Eastern founders. This is what we're seeing. We hope really geopolitical issue really won't be an issue to stop innovations happen, because that's eventually we want to push the innovations to serve the whole humanity.
That's why we're all here.
Yeah.
All right, Ella, we do got to wrap, but I want to ask you one question very quickly. We talked about founder mistakes, but if you had to say one quality you look for in a founder, what is that?
Long-term thinking and have the true driver to solve the problem. It's long. It's a long.
No, that was great. You're looking for long-term thinkers who really know how to solve problems and dig deep into challenges that are facing people.
And have the product founder fit.
Exactly. Ella, thank you so much. Thanks for being at Consensus Hong Kong, and we'll see you around.
Thank you.
Thank you.
Thank you for having me.
That was Easy Labs head Ella Zhang. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today. To CoinDesk Live at Consensus Hong Kong. If you look at the intersection of culture, entertainment, and Web3, one name consistently appears. He's the co-founder of 88 Rising, an early investor in TikTok and Coinbase, and a serial entrepreneur who has raised over $1 billion in capital across the globe. Now he's teamed up with music legend Wyclef Jean to launch OpenWave, a platform aiming to put the power and the payouts back into the hands of creators. Joining us now to discuss the future of the superfan economy is the co-founder and CEO of OpenWave, Jason Ma. Hello.
Thanks for having me.
Thanks for being here.
Yeah.
All right. There's a lot to unpack here. But the first thing I want to talk about is this joint venture that you formed with Loud House. Talk to us about what that is. Lay a foundation here.
Very exciting. We just announced it during Grammy Week. So Loud House is a artist-first social commerce platform. It's actually invested by a Universal Music Group. And so what they're doing is powering, I would say, like the Disney businesses around the biggest artists around the world, music artists specifically. What we're doing is supplying supply chain. So we're actually going to tokenize, and we're actually going to give them supply chain to build premium, what I call on-demand products. And so basically imagine high-level LA apparel type of hoodies, Yeezy level apparel. Could be toys like your own Labubu, but your own Post Malone version, but basically powered by OpenWave. So we're a social commerce platform that does supply chain for a variety of products, and we ship around the world.
Now, you were just at the Grammys. You got to talk to us a little bit about the Grammys. You said this launched there. I know that you had an event. How are artists talking about tokenization? How are they receiving it? Is it something that they finally understand the benefits of, or is it still something that the artists on the fringe are participating in?
I think that conversation is a very 2021 conversation. I think artists honestly just have a very negative experience with NFTs, just the backlash of how everything went in 21, 22, and off of FTX and all these other companies that kind of went downhill. I think that left a bad stench in a lot of these artists' mouths, just to say frankly, like Katy Perry or Tom Brady that was connected with FTX. I'll just be straight and honest and straight to the point. But I think they don't care about tokenization as much as they care about fandom, right? And so I use this analogy, and I spoke at this at a Warner Music CEO conference a few years ago, when I was trying to explain the idea of a digital identity or tokenization, or what we call non-fungible token NFTs. And I said, basically, imagine if you met The Weeknd and you're a fan of The Weeknd before he was The Weeknd, and his name was Weekday. And he didn't have 10 million followers. He wasn't performing Super Bowl. He only had 10,000 followers. I know so many A&Rs. Those are executives go and look for talent. And I have so many that through the years told me, Jason, I saw The Weeknd when he was in a warehouse with like 500 people in Toronto in this underground basement. I'm like, how do I know you're for sure that you really were there? How can I actually authenticate that? So imagine if you're actually a Weekday fan on Open Wave, and you actually get a weekday badge because your weekday fan subscribing number 1, your weekday fan number 10, number 12, number 55, number 111. And when he goes from 10,000 to 10 million, 100 million, and performing the Super Bowl, you still have that badge of honor, that badge of membership. They get you access to early tickets, early merchandise access, early exclusive content, front row seats backstage, at the tour, behind the Super Bowl, at the after party. So that is the power of a non-fungible token. It's really a receipt. It's an authentication that says, hey, I really was there. I really was a day one. I was there. I was number 55 before this artist became the weekend. I knew him when he was the weekday, and I got a badge to prove it. That proof doesn't need to be tokenization or NFT. Artists don't care about that verbiage. What they want is use case. What they want is value. And what they want is to bring value to the community that supports them, which is what I call the true fans or the super fans. And Open Wave really is a 1% platform. What I mean by that is you only need 1% of your true fans to support you to actually make a living. Because the lie is in social media from 2012 till now, since Instagram came and now TikTok, is, oh, get bigger and you'll get more money. Bigger's better. If I get 1 million followers on social, I'll get 1 million monthly listeners on Spotify, I'll make money. That's not the truth. That's not the case. You can have 1 million followers on Instagram and still not pay the rent. I know a lot of influencers and creators that do that. But if you have 1,000 true fans, give me $10 a month on Open Wave, and they subscribe and they can prove that and authenticate that through a smart contract, that's value, right? That is actual value. You're now making 120 grand a year as an independent artist with $10 a month of subscription with 100 or 1,000 full fans, true fans, and that's what I'm talking about.
You're talking about the super fan concept. If I were to start out as a content creator today, how would you suggest me to approach this career differently versus if I want to reach mass audience?
It's a great question. I think at the end of the day, 2026, we're going to see AGI, automated AI, automation continue to explode. But how do you actually know what's real and what's not real? So literally, I remember just watching the Minneapolis, madness with ICE right now, and all these videos coming up in my Instagram and TikTok, and I found out 90% of them were fake, right? So how do you actually authenticate that? That's where blockchain comes in. That's where Web3 comes in. So AI is for automation, blockchain is for authentication. And I think Open Wave, what we built is a patent that actually leverages both. So you can actually come in and say, as an artist, okay, if bigger is not better and smaller is more impactful, how do I actually reach my first 100 true fans? How do I reach my first 1,000 true fans? I used to be a missionary in another life. If you had a church of 1,000 members, you're a rock star. Okay, you had a church of 10,000, you're TD Jakes. Okay, at this point, right? You're what's that guy's name? Joel Osteen. Okay, right? You're a literal mega church celebrity rock star. If you got 1,000 true fans, and I meet these artists all the time, oh, and I got 10,000 followers, only got 50,000. Yo, you got 10,000 potential real customers. Bring them value. How do you bring them value? Okay, I'm going to give you access to tickets first. I'm going to give you front row seats. I'm going to give you access to my album 10 days, 100 days before I drop it on Spotify on Open Wave. I'm going to give you access to this limited drop with only 100 of these hoodies signed by me with exclusive vinyl. And you're going to get it first, right? And you're going to get it in my community chat. So we literally built Discord, Patreon, OnlyFans, Shopify, Printify, and literally Spotify in one platform. It's the everything platform for any artist. And so I'm very excited about launching this with Wyclef. If you guys saw him perform at the Grammys with Miss Lauryn Hill, that was kind of fire at the end. We're doing this because we are lovers of music. We are fans of music. And we're sick and tired of seeing fans and artists suffer, right? Right now, it takes it takes literally 3 million streams, okay? 3 million streams for an artist, okay, to even make $1,000 on Spotify. So last year on Spotify, less than 0.06% made $10,000. We're talking about artists are not making money on streaming. So how are they making money? Spotify's not paying them. Daniel Elk's building, drone nuclear missile companies. And then you have artists that are bringing the value to Spotify, bringing value to these DSPs that are actually not getting paid. So how do they get paid? Through ticketing, doing shows, physical merchandise and now digital merchandise exclusive content, Openwave built a platform leveraging blockchain technology and generative AI technology to give the artists a full label in their pocket right here at the palm of their hands.
All right, Jason, we do got to go, but I want to ask you one quick follow-up. I think a big misconception around this conversation is people are thinking about the big artists. They're like, why are the Taylor Swifts and Drakes not participating in this? But what you're saying is it really is the next iteration of the music business. This is for the artists that are coming up. This is for the artists that are building their audience, and it's going to inform how the music industry continues to grow.
Absolutely. So I think in the future, 99% of artists will not need a major label, okay? The major labels will still and always exist. Why? Because there's always going to be a Lady Gaga or Bruno Mars, right? Or, a chaperone that will need that major label marketing dollars machine and to get them at the Grammys and get them on the Jimmy Fallon show and get them that Spotify billboard, right? But the majority of artists, you have all the technology. You have all the software. You have all the distribution. Distribution is a commodity now. Everyone can just go on DistroKid, pay $25 a month and get their music on Spotify and iTunes, right? So now the question is, what are the tools that we can give to an artist to actually build their community so that they can make a living? And that's what Openwave is here for.
All right, Jason, we got to wrap it there and head on over to the main stage. Thank you so much for joining us at the desk. It was a pleasure.
You two are pros.
Thank you.
All right, we are going to head on over to the main stage and hear a keynote by Financial Secretary Paul Chan.
Finance continues to broaden in both scope and sophistication. A few trends are more prominent. The first is tokenization of RWAs. In a growing number of markets, tokenization initiatives are moving from proof of concept to real-world deployment, supported by more institutional adoption. Government bonds, money market funds, and other more traditional financial instruments are increasingly being issued on Miller on-chain, using digital ledgers to enhance settlement efficiency, enable fractional ownership, and unlock liquidity in assets that have traditionally been less liquid. Hong Kong is one of the pioneers in this space. The Hong Kong SAR government was the first in the world to issue tokenized government green bonds. Last year, we built on this foundation by issuing the world's largest digital green bonds with a multi-currency offering of 10 billion Hong Kong dollar. Meanwhile, financial institutions are becoming more receptive to digital assets. By the end of last year, banks in Hong Kong held over 14 billion Hong Kong dollar in digital assets under custody, a year-on-year increase of about 180%. Banks have also begun offering tokenized deposit services, with the total value of such deposits reaching 29 billion Hong Kong dollar by the end of last year. The second trend is a related and evolving one, that is the interaction between TradFi and DeFi. Traditional institutions are now importing DeFi mechanisms into their ownership architectures, such as automated market making, programmable liquidity pools, and the use of on-chain collateral to support more efficient trading, funding, and settlement. At the same time, DeFi is coming under growing regulatory and supervisory pressure in multiple jurisdictions, particularly in relation to anti-money laundering, investor protection, and border financial stability. There have been growing calls for DeFi to be brought under existing or emerging digital asset regulatory frameworks. The third trend is the growing intersection between AI and digital assets. AI systems are being designed to interact with tokenized money and smart contracts, enabling the autonomous execution of certain transactions and settlement. At the same time, AI tools are making digital asset markets more intelligent, efficient, and data-driven. As AI agents become capable of making and executing decisions independently, we may begin to see the early forms of what some call the machine economy, where AI agents can hold and transfer digital assets, pay for services, and transact with one another on-chain. While this shift could deliver substantial efficiency gains, it also raises important questions around AI governance, accountability, and cyber security. Against this backdrop of rapid global experimentation, what are we doing in Hong Kong? We are charting our course, leveraging our unique strengths as an IFC, International Financial Center, to stay at the forefront of innovation and keep pace with emerging developments. A few principles are guiding our strategy. First, under the one country, two systems framework, Hong Kong is free to explore financial innovation, including, of course, in digital assets. We stand out as a market with consistent, predictable, forward-looking policies and a balanced and trusted regulatory framework. We welcome Web3 innovators and institutions from around the world to develop and scale their businesses here. At the same time, we recognize that innovation often moves faster than regulation, potentially creating gaps and new risks. We are therefore carefully balancing the promotion of innovation with the need for sound risk management. Our objective is to embrace new technologies while safeguarding investors, consumers, and the overall financial stability. The principle of same activity, same risk, same regulation continues to underpin the design of our regulatory framework. Second, we see Web3, blockchain technology, and AI as powerful enablers of the real economy rather than ends in themselves. Our policy focus is therefore on how these technologies can be applied to enhance efficiency, lower costs, and support concrete real-world use cases. Ultimately, our aim is to make financial services more inclusive and accessible, while addressing the long-standing pain points in transactions and market operations. Third, we are committed to pro-innovation regulation. Our regulators operate with a dual mandate. They not only exercise prudent supervision, but also actively facilitate market and product development through mechanisms such as regulatory sandboxes. We support experimentation and in some cases co-create solutions in close collaboration with innovators and industry participants. Ladies and gentlemen, with these guidelines in mind, we are pressing ahead to advance Web3 development in Hong Kong. Let me highlight some of our latest initiatives. First, on regulation, we continue to enhance Hong Kong's regulatory framework for digital assets, including the launch of a regulatory regime for stablecoin issuers in August last year. We see stablecoin as a practical tool for addressing the pain points in the real economy, particularly in payment and settlements. In giving out licenses, we ensure that licensees have real-world use cases, a credible and sustainable business model, as well as strong regulatory compliance capabilities. Our strategy is moving forward fast, step by step. Therefore, we plan to issue only a small number of stablecoin issuer licenses in the first batch in March this year, but more will follow. Meanwhile, we are also finalizing the details of a new licensing regime for digital asset dealers and custodian service providers, with the aim of introducing the legislation this summer. Together with the framework already in place, this will ensure that our regulatory regime comprehensively covers the key nooks of the digital asset ecosystem. Second, on product innovation and development, we will regularize the issuance of tokenized green bonds. At the same time, we encourage market innovation and nurture the broader ecosystem. For example, building on the Project Ensemble Sandbox, Ensemble TX was launched by the Hong Kong MA in November last year. It is a new pilot phase that enables faster, more transparent, and more efficient settlement of real value tokenized transactions. Looking ahead, as the convergence of AI and blockchain continues to accelerate, the government and our regulators will work with the industry to foster concrete high-impact use cases while ensuring that emerging risks are properly identified, monitored, and managed. Ladies and gentlemen, before I close, let me leave you with this message. The Hong Kong SA government and our financial regulators fully recognize and are committed to keeping pace with rapid technological change and building a vibrant digital asset ecosystem here in Hong Kong. We welcome global innovators like you to join us on this journey. In less than a week, we will celebrate the Chinese New Year. This year is the year of the horse, which symbolizes agility, stamina, and strength. May I wish you all a prosperous and energetic year ahead. And for those who have traveled from afar, I hope you will take some time to enjoy the festive spirit and the unique charm of Hong Kong. My sincere thanks once again to Condes for hosting this remarkable event in Hong Kong. May this event inspire more fresh ideas and lasting partnerships. Thank you very much.
Hello and welcome back. That was Financial Secretary Paul Chan. If you're just joining us, welcome back to CoinDesk Live, coming to you from Consensus Hong Kong. APAC has emerged as one of the most active regions for institutional experimentation with tokenization, on-chain settlements, and regulated digital assets. Joining us now for more is Stellar Development Foundation Chief Business Officer Raja Chakravorty and MarketNode CEO Rehan Ahmed. Hello to you both.
Hello. Hey, Jen. Great to see you.
Great for you both to be here. The vibes at Consensus are vibing. I know the two of you were just on stage. Give us a little preview for our audience at home that weren't able to watch. What were some of the insights you walked away with?
Yeah, I think from my end, we had the opportunity to talk about APAC, talk about tokenization, and really start to focus on this concept of distribution, which is really key. I think over the past year, what we've seen is this real acceleration in terms of how many tokenized products are now available on chain. But now, over the course of the next year, what we're really going to be focusing on is this idea of how do you distribute them? Where are the investors? How do you build really unique profiles that are going to be really tangible for investors to come in? And I'm really excited to see that move at scale. And I think in particular, APAC is a region where we're going to see a lot of that growth.
Rayon, how are you looking at the APAC region?
Sure. So let's introduce APAC to your viewers who may not be watching from the APAC, right? So I'm sure you know about the population demographics, but some of our partner research has shown by 2030, we're expecting 7 million millionaires in the region. 60% of the world's youth is in the region. 3,300 fund managers that are between Singapore and Hong Kong, and between them, roughly 10 trillion plus in assets, right? So the opportunity we see, we were actually with one of the large global fund managers on stage, and it was a great nexus of infrastructure, network, asset originators, looking to tie in this demographic to, frankly, the future of wealth distribution, right? So that was one big theme that came out. What are some of the Asia demographics that make it very natural, not just for experimentation, but commercialization, right? And the next learning for me was we always felt that tokenized real-world assets would move beyond money market funds, simple bonds, into more complex products. And if you think about the wealth portfolio for a typical high net worth individual in Asia, on-chain assets should start mirroring that, right? So we're really excited in 2026 to work with partners like Stellar and see how we can actually take product diversity to the next level.
I think those stats you shared were really interesting, Raja. I want to build on that a little bit with you. We often, at least at CoinDesk, we're based in New York. We focus a lot on what's going on in North America, in the news we cover, and the conversations we're having. Of course, the administration in the U.S. wants to make the U.S. the crypto capital of the world. But when I hear stats like that, it really sounds like all of the pieces are in place in this part of the world for real experimentation when it comes to both institutional adoption and even on the retail side.
I definitely think that Asia Pacific is really well poised to do it. I think one of the big growth drivers we saw over the last year was this tokenization of US Treasuries. And so we saw an 80% growth last year in that asset class. And I think we exceeded about $7.4 billion on chain. Now we expect that to grow to 20 billion plus over the course of the next year. But in Asia Pacific, there's this whole host of incremental opportunities that are happening as well. What we're starting to see with a lot of institutions out here is this real view that tokenization can help create incremental opportunities on the distribution side. So one of the conversations that Rayon and I were having was, hey, look, we've seen some growth in what I would almost describe as vanilla assets. Certainly Franklin Templeton is a great example of a partner that is built and I think scaled well on the Stellar network with almost $1 billion worth of tokenized treasuries. And now the question is, well, what else is next? So there's now opportunities to start thinking about structured products. And this is an area where we've seen a lot of potential opportunity. You're seeing structured products like AAA tranches of CLOs coming on chain, and they're DeFi enabled. And what you're able to do with that is able to take those, put them in a protocol, perhaps actually isolate new yield profiles, which starts to attract a different investor base. And that investor base can start to curate a portfolio that is a lot better designed for what type of return that they want. So that's really exciting. The other thing that is even more exciting in my mind, though, is this efficiency layer. And that's something that we're seeing is having a lot of attachment. So if you look at kind of traditional finance, people are looking at like a T+2 settlement timeline. Well, now you can actually move from T+2 to about T+5 seconds. And that's incredibly exciting from an efficiency layer. And so you're seeing this opportunity for both growth in terms of incremental value, which drives incremental revenue, but also this efficiency layer. And so you're increasing the value dramatically. And we're really excited to see APAC really take off from that area.
I want to hear a little bit from you on that settlement speed. Is the infrastructure ready for TradFi assets to come on chain en masse and settle at that speed? Or is there maybe still some development that needs to be done?
I think the infrastructure is ready. I think one of the pieces that we think about is this idea that a network, if you're going to actually be institutional grade, it really needs to have institutional grade capabilities. It needs to have institutional grade uptime. with the Seller Development Foundation, one of our core focus areas is how do we ensure that the seller network has that? And, I think we're really excited to talk about our 4 to 5 nines of uptime, which is critically important for financial institutions as they come on board. When you couple that with the settlement speed basically being sub-second finality and kind of 5-second block times, you're actually allowing that to happen at scale. And then of course there's the cost of infrastructure where the cost is down to about 0.005 cents per transaction. So you combine all of these things together, and that is institutional grade. And so, yes, without a doubt, it is ready to scale. It has scaled. There's multiple examples of it. And I think this is the year that we see the investors come in because they've now seen that that is demonstrated scale.
I'll kick this question, Rehan, to you next. Raja was talking about starting with vanilla assets and moving into maybe some of the more exciting ones that the crypto ecosystem has to offer. What are institutions asking for? How are they looking to grow? And if we look at where we sit today, is current market volatility making any of them take pause?
Sure. So the way I'd look at on-chain assets is if you think to yourself, the starting point is, how do I bring a typical Asian investor's portfolio online? What should that look like? Part of it will be your liquidity items, your money market funds. Then you start graduating to bond funds. Almost everyone in Hong Kong and Singapore owns a structured product. You can't be a true wealth investor without that. And then you have commodities. And then after that, you have, for example, private debt. And you must have real estate in Asia, right? So when I'm thinking about asset manufacturers, I think they're looking at the demographic change in Asia and thinking, the same representation of assets that I bring to the traditional world, how do I bring it to the on-chain world and allow a bit more composability between them, right? So I think that's a demand from the actual asset originators. If you are someone who's consuming the asset, you may look at yourself and say, you know what, all my assets sit in a wallet. I want to have my traditional assets in a wallet as well, right? So I think that's the question, which is how do you have an infrastructure that hopefully allows assets to come on and scale, and from a distribution standpoint, allow the holder to have their eyeballs on a single wallet and see everything. And hopefully that's something MarketNode, that's exactly what we do as infra, working at partners like Stellar. Hopefully that's something we enable for Asia in 26.
And Raja, just before we go, what do you expect to see as we head deeper into 2026? What do you think is going to change for institutions this year?
I think it is really moving from creating an asset to distributing it at scale. So I am incredibly bullish of that opportunity. So really excited for that. And also really excited to wish you a happy birthday.
Thank you so much, Raja. I'm having the best birthday here at the desk. Everyone wishing me a very happy birthday. If you are just tuning in, I've already gotten balloons and flowers. And I will say, apparently balloons, we're not allowed to have balloons in the building. So some people risked some stuff for me. Anyways, moving right along, Raja, Rehan, thanks so much for joining us at the desk. Thanks for being at Consensus Hong Kong, and I'm sure we'll see you later.
Thanks, John.
Happy birthday. Thank you.
All right, we're going to take a quick break. When we come back, Bonnie Blockchain is going to be taking over the desk. Stay tuned.
Sam, where are we going?